I was waiting for some amazing, incredible sting, but Shane won't give it to me. That's terrible, isn't it? There we go. How are you? You're looking not particularly happy at this point in time, are you? Oh no, come on. Andrew Hudson from Resolve Mining. How are you going?
Very well, thank you.
Are you going to have a chat to us today, or are you just happy to watch everyone else today?
Happy to watch.
There's a line in there. Okay. All right. Well, you can watch what's coming up next. We've got a gold boy coming up next. We have indeed a little bit of a delve into his background. He's a Sydney boy. We won't hold that against him. He came over here for 3 weeks or 3 years? 3 weeks back in 1998, and he's still here. He's stumbled upon some good stuff. He's stumbled upon some good investments, and he may have something for us to invest in. So let's tell you a bit about the company. Brad Valiukas is MD of Aurumin. It's a WA gold explorer in the Southern Cross region. And the company is currently extracting value of their portfolio of projects. Would you please welcome Brad to the stage, our first presenter in this section.
Thank you, Chrissy, and thank you everybody for being here to listen. So Aurumin Ltd, we're a West Australian-based company, gold projects in WA, high grade, all with previous mining history, and we listed relatively newly, December last year. Disclaimer for your leisure. Look, board, I won't go through all the details, but very experienced, well-credentialed board. Myself, mining engineer, plus 25 years experience, but between us, we cover corporate finance, exploration, geology, operations, and development. 86 million shares on issue, a share price of about 20 cents. We're $17 million market cap. We're a touch under that today at around 18.5, I think. So EV somewhere around that $14 million. Key from our shareholder distribution, board and management speak for 24% of the company, and that's all related to money that we put in to get these projects to market over the last couple of years. High level for the company, we've got 2 high-grade gold projects, Mount Palmer, Mount Dimer, and I'll talk about those. Ongoing exploration, we should be out drilling at the moment, a little bit of rig delay. We should be spinning on Sunday or Monday. Good board management, as I just said, and certainly we're keen to grow fast. A lot of experience and background running multi-operation companies, and yeah, we can grow and take on quite a bit more. ESG right up front, we take that quite seriously. In terms of rehabilitations, exploration company, obviously we do that, but we've been doing a heap of other cleanup as well, including things like our Mount Palmer historical mine site there. You know, we've taken 120 cubic metres of old historical rubbish and things out of there. Local support, in particular around that Southern Cross area, we support local contractors where we can. We buy at a local community when we can and it makes sense. Everything we do, we firmly believe it should be for mutual benefit. And we try and treat all our partners with respect. And look, as a serious operations guy, and I've built multiple power stations and set up multiple operations, I'm very confident when we go to production, very cost effectively, you know, we can be at least sort of 70% starting from scratch in terms of renewables for at least fixed infrastructure. Our Southern Cross is the base of where operations are at the moment. So a very well endowed region of the country. Existing projects there for us, Mount Dimer and Mount Palmer. Mount Dimer produced 125,000 ounces at around about 6.5 grams, so pretty good grade. Mount Palmer produced 158,000 ounces at 15.9 grams per tonne. So for us, I think that's sensational. A lot of upside near mine. I'll go through. Exploration's been massively underdone on both those projects, and in Southern Cross, there's still quite a bit of opportunity for consolidation around that area, both exploration companies, and I think, you know, as a developer in that space, in that area, there's quite a bit of opportunity for us going forward, and also holdings that are held by smaller parties and private, and we're working through a couple of those at the moment. So Mount Dimer, as I said, mine 125,000 ounces gold, a couple of pits there, historic pits there on the bottom. Discovered originally by Western Mining in the late 1980s. They were out there looking for oxide gold and a little bit of nickel. Didn't really find either. This is high-grade quartz coming to surface. High-grade unmined deposits, Lightning and Golden Slipper. I'll show you some long sections of those in a moment, and then a pipeline of other prospects that we're working through. So this is lighting out of our last drill campaign. This is certainly the headline number to the north of that deposit. We're trying to extend that. We know the structure's still there from geophysics, just testing along for grade. We drilled 4 metres at just under 50, including a metre at 153. So that was a very much a headline for us. Highlights the potential that these projects have. And really importantly for that as well, that ultramaffic's always been thought to be barren out of the geophysics and the other work we've done. Leading up to that, we certainly knew the structure continued through there, so we were super pleased to get that sort of result. Not just for the result itself, but because really what it starts to open up. All this work at the moment, we're targeting in sort of top 100, 120 metres, trying to build ounces in that window. This is Golden Slipper. This is our second deposit that's got good mining potential in the near term. You can see the second half there, the southern half to the left of the screen with all the pink dots. There's images in the presentation, but some pretty good grades there. Drill campaign before last, we got 7 metres at 7.5 out to the north, and we think there's still quite a bit to go there. We know those deposits continue. Like, it's not just Supergene. There's been an underground there before. Those pits on one of the earlier slides, LA1 and LA2 was underground there. We see nothing different in all the mineralisation or the drilling that we're doing at the moment. And in fact, with a few things that are obscure close to surface, there's a little bit more potential, sort of around 50 metres and below surface, and there is just at surface for a number of reasons. And certainly we're looking to build the ounces there at Golden Slipper and Lightning, and then we'll look to extend underground once we get the critical mass for ounces per vertical metre established. There's plenty of other things there to work through as well. This is our LA3 deposit, also very pleasing. Out of last drill campaign, we got 5 metres at just under 20 to the north, and just like Lightning will be out there following up very, very shortly and pushing that a bit further, open in all directions, and certainly there's a cut back there to go at some stage. But one of the big reasons we're up there is not just to follow up what's been done before and what's already known. We firmly believe that there's good potential for quite a number of additional deposits up there. So this is T12. So early on in our listing life, we did a SAM survey, identified a bunch of structures running through there. We did some drilling across those structures, picked up quartz veins, picked up areas with a bit of grade. We've gone back there now, picked up some really good results from last drill campaign, 4 metres at 2.5 and 4 metres at 2.7, 8 metres at 2.5, and sort of just 15 metres below surface. So at the moment, it's a T, it's a target, but firmly looking to convert that over to a new deposit in the very near term, and looking to replicate that across the portfolio of targets there. The second project we have in the portfolio is our Mount Palmer project. As I said, 158,000 ounces at 15.9. Discovered 1934, mined straight away. Commercial production ceased in 1944. And there's been some alluvial works and things done there since that time, but really nothing commercial. Very happy with the tenement package we've got down there, located effectively between our project at Mount Palmer, nice high grade, and then extending down to the south towards Navoria, greater than 400,000 ounces mined in the banded iron formations down there, and then also Yilgarn Star, greater than 1 million ounces just off our tenements in the sediments. So we certainly look at that as very high grade and very high potential. We drilled some holes earlier in the year, and we were, fair to say, disappointed, looking for some remnant opportunity just in and around the mine there. But it doesn't take away from the overall package there. So we're now working out from the existing mine, undertaking a systematic process. We've been doing some validation soil sampling for some old stuff. We've done a whole project scale mapping exercise. Very happy with what we've got through that. Certainly think we've identified the fluid flow through there. So we're now moving across to a far more targeted process there. We'll be hitting it pretty hard with soil sampling and rock chips at the end of this year and leading into next year. We should be out there with some air core in about February or March, subject to those results. But we've got a 15-kilometre strike of greenstone there that's hardly been touched over all these years, despite the fact that it's in Southern Cross and so much work's been done in that region in general. And look, grades there, proofs been there before, so we're quite happy with that. Third project we don't talk about too much. Last slide in the presentation. Project called Johnson Range. We released a resource for that a little while ago, 65,000 ounces at 2.5 grams in the top 100 metres. Sits there. It's a little bit far away from anything almost. It's a little bit stranded. We're working through a number of options there to realise that value, and hopefully sometime in the next couple of months we'll come out with what we're going to do with that project. Certainly there's value and money to be made there. So the reasons to invest in us, we've got two good high-grade gold projects, Mount Dimer, Mount Palmer, all well located, WA, easy to access, no major issues. Ongoing exploration and news flow. We'll be back out there this weekend. Good board and management. This is certainly well within our wheelhouse, and ambition to grow fast. We spent a lot of time looking at other projects already, and we'll continue to do so. Thank you. Any further questions, please come to the booth.
Brad, you finished so early. You've got 5 minutes up your sleeve. Someone could actually ask you a question. Has anyone got a question for Brad from the floor? It's his time. Anyone at all want something to put to him? Not how he ended up here for 20 odd years instead of 3 weeks. How did you end up here for all those years instead of 3 weeks?
I just came to do a
Did you fall in love with someone?
No, that's actually why I came back from Ireland to WA.
Oh, right. Okay.
I met my wife.
Now we're getting personal. Okay, we'll come and ask you questions about things that we can make money on later. Right. Okay, I flustered myself then, didn't I? Well done, Chrissy. Right, the way forward for energy, if you believe our next presenter can only be in the form of one, you laugh at me, I'm laughing at me too, one rare earth, uranium. And it recently hit its top price in the last 5 years, correct? Yeah. Now, the company that's coming up here to present is relatively new. 2 months, 3 months?
2 months since we've done the acquisition.
And 7 months ago, the group that have actually bought it up, have the genesis for it, they didn't even exist either. They were doing their own thing, running around doing other things, and they wanted to find something that they thought had real legs. This is what they think has real legs. So we'll see if you think it has legs for your portfolio as well. The company is Okapi. And the fellow at the front here is Ben Vallerine. Would you please welcome Ben, the Technical Director of Aurumin Resources.
Thanks, guys. Yeah, uranium, we might be the only uranium stock here this week, but watch this space next year. There'll be a bunch more of us here. Uranium's hot to trot. It's going to be the one to run in the next couple of years, and hopefully it's going to drag our share price along with it. And a bunch of new IPOs and people getting into the uranium space with us. So Aurumin Resources' aim is to become a new leader in the North American carbon-free nuclear energy space. So like the lithium guys, we're going to try and capitalise on the new green energy movement that the world's going through at the moment. The standard disclaimer for everyone there. Feel free to read that in your own time. Just a quick chat about the board. I'm the technical director. I actually worked on these uranium assets between 2007 and 2012. I lived in the US and ran these very projects for a company called Black Range Minerals, previously listed on the ASX. So I came with the projects and joined Okapi about 2 months ago at the end of August. Chairman's Peretz Shapiro is actually living in the US at the moment, escaping Melbourne lockdown. So he went to the US. David Noor's the executive director. They're based in Sydney. Background in property and private wealth, and then Leonard Math, who's executive director and company secretary, is here with me today at the booth. Any questions? Feel free to come and see Leonard and myself. So, Aurumin Resources, we're focused on becoming this new leader in North American carbon-free energy, and we're assembling a portfolio of quality assets in the US. And we chose the US largely because they're uranium friendly and they're the largest producer of uranium power in the world. They've got about 100 nuclear reactors, and they get about 20% of their power from nuclear. They're pro-nuclear, and it's just a great place to be when you're looking for uranium. They import most of their uranium, so they're not a huge domestic producer. Our initial acquisitions is a portfolio of high quality uranium development assets, and they're located in Colorado and Utah. central Midwest US. It's a really good place to operate. People are the salt of the earth. They give you a shirt off their back. Which is just south of Wyoming. It's a famous ISR district. A lot of uranium production. There's probably 5 or 6 producing uranium mines in Wyoming, and certainly producing uranium mines in Utah, operating mills. The assets that were originally entered into Okapi were identified by the former founders of Black Range, being myself and Mike Haynes. Previously Black Range's projects, and we went and found those and reacquired them and put them into Okapi via a transaction. At the time when Black Range was operating these assets in 2007, they got to a market cap of 180 million, and that was prior to the release of their JORC compliant resource. So $180 million value on these very assets that Okapi has today. The project currently has a JORC compliant resource, which we put out recently. It's 27.6 million pounds at a grade of 490 ppm. Compares very favourably with other ASX listed companies and assets in production. Black Range, when they had this district previously, they consolidated the whole area and had a JORC compliant resource of 91 million pounds through basically acquisition and consolidation of the district, which I'll show a bit further. Corporate snapshot, we've only got 100 million shares on issue. We've been trading right around that high 50s, low 60s, so $60 million market cap. We're very, very tightly held. 30% is held by the vendors of the uranium projects. 11% is held by the board. So very tightly held. You can see our share price performance over the last year and a bit. The initial peak there in July is when the transaction was originally announced. And then the following peak there is when there was a bit of a run in the uranium price. So the uranium price has been floundering around about $30 for a long time now. And we have the insight to go and acquire a few uranium projects, believing that it was going to run. And very shortly after this transaction, it ran to 50. And it's pretty much settled around 50 for the moment. We like to compare ourselves to Peninsula Energy. They're also based in the US. They have a resource base roughly double ours, grade very, very similar. They're slightly further advanced than us. They're currently valued around about $5 a pound, which would, if we could get to that stage, would value us close to $140 million. The average price per pound on the ASX at the moment is about $3.20, which would value us $75, $80 million. So we think we're cheap. We think there's a lot of room for the uranium price to move, and that'll take us along with it. So again, this is our advanced North American assets. So again, we're focusing on the US. We have a large resource base, 27.6 million pounds at 490 ppm. This is our property here, showing a lot of historic drilling and some of the neighbouring properties that we don't have. We have about 7,500 acres. That's all private land. In the US, minerals are quite different. So 2 large ranch owners own this 7,500 acres, and those ranch owners own their mineral rights. So we have leased the mineral rights directly from the ranchers. They've been around on the property for 3 generations. So they've actually seen the uranium exploration and mining over the course of the last century. There's significant exploration potential of this project. Although it's been well drilled, the focus was always deposit to the south, and less exploration has been done on our property. There's a large swath of land that has barely been explored off to the west. Within that channel, you can see. I suppose I can point that out. This area through here, it's still in the host sandstones. Very little exploration through there. So there's a significant potential to expand our resource by exploration and also by acquisition. So we have a clear strategy to become that new leader in American carbon-free energy. We strongly believe in the green energy movement, and we believe that the uranium has a very significant part to play in the decarbonisation process. The uranium market's tightening with guys like Sprott, asset funds starting to buy physical uranium. Kazatomprom's recently announced that they're going to start buying physical uranium as well. So the uranium market really is heating up. So this is the uranium price since 2001. When Black Range was active out there, it was during the previous peak, immediately pre-GFC. Uranium actually got to $136 per pound. The current spot price is 50. We believe this is a different cycle. It's driven by the shift to net zero emissions. It's driven by the electrification of the global economy. We believe the introduction of small modular reactors. Bill Gates' company in the US is a chairman of, along with Rolls-Royce, developing these small modular reactors. It's much smaller capex, and they can produce significant power, and it can be done much easier than building a nuclear power plant. They're potentially a game changer in the nuclear energy production. And as I said before, also the entry of Sprott, the Physical Uranium Trust, purchasing uranium. So currently the world is really dependent on fossil fuels. If you've got a lithium battery and you're driving a lithium car around Perth, you're generally going to have to take it home, plug it into the power point. And here in Perth, we're still getting most of our power from fossil fuels, from coal and gas. So you're still charging your lithium batteries with coal and fossil fuel burning at the moment. Nuclear is one of the few ways where we can get that baseload power and really replace coal and fossil fuels. It can generate baseload power and it can do it very, very green because there's basically the nuclear power production. There's basically no carbon emission at all. There's obviously a little bit during the mining phase, but there is for green energy. Solar panels, wind power, you still got to mine those things. So yeah, as I said, the electrification of the global economy, it's what we think is really going to drive the uranium price in the next couple of years. Even President Joe Biden, for the first time in 50 years, the Democrats in the US are pro-nuclear. They believe that to reach their 2050 emission targets, they basically have to have nuclear as part of the mix. And America's already got 100 nuclear power plants, so they're well set up to make that shift relatively easily. The uranium supply and demand fundamentals are continuing to tighten as well. Last year, there was about a 25 million pound deficit in the uranium production and consumption. So the secondary supplies are starting to be consumed, and the true supply and demand markets are starting to shift towards the producers' favours. So this is the Tallahassee Creek Uranium District, our primary asset. Historically, it had 2,200 holes drilled at 350,000 metres. You can see Newmont's Cripple Creek operation off to the west there. That's a 20 million ounce gold deposit. It's a heap leach valley fill operation. So the district well understands mining, and heap leach mining is a significant operation in the mountains there. It's quite close to us. In addition to that, in the direct district where we're at, uranium was first discovered in the 50s, and they commenced mining in 1954. There was further regional exploration in the late 60s before the 1970s, when the Hanson deposit was discovered by Cypress Mining in a joint venture with Westinghouse. Westinghouse being a major utility producing nuclear power in the US. So mining ceased around the same time as the discovery of Hanson, but they continued to explore and were able to define a 30 million pound mineable reserve at Hanson. And Hanson was actually fully permitted, went through the whole process to get mining, and they actually commenced mining, or they commenced construction. They were going to mine by traditional open pit mining and process via a conventional acid leach facility, much similar to gold, just a different process. And that actual processing facility was going to be on our property, on the Taylor Ranch. But they actually started delivering the cable to that property, and we're going to start the sub power plants and the processing plant when the uranium price crashed in the early 1980s, and they ceased all plans. And it wasn't until the 1990s when they returned the property back to the ranch owners. And then in 2006 was the first time that saw more activity, when Black Range came along and acquired these ranches and started putting back the district together and got that 91 million pound resource by the end. So the superior geology, it's sandstone hosted, much similar to the deposits in Wyoming. It's in a braided stream type system. They're tertiary sediments. They make flat lying tabular deposits. They're horizontal, they're thick. They generally have a high grade halo with a kind of a large low grade envelope. Some smaller high grade deposits are hosted in the superficial deposits, but the main focus is these deeper sediment hosted ones. The recoveries back in the day by the work done at Hanson, which is just to the south of our property, was 95% with conventional acid leach. As I said, mining never eventuated due to the collapse of the uranium industry. So we have a clear strategy to expand this existing resource. I know personally a lot of the guys who own property out there privately, plus there's a combination of state lands. We've managed to lease one state land off the state of Colorado. There's a combination of federal lands and mining rights held by private companies and even some listed companies out there as well. The Tallahassee personnel and consultants have got a long history working in the US and in this district, extensive knowledge of operating in the area. We're planning a 10,000 metre drill program. That 10,000 metres is designed to expand the existing resource base on our property, improve the confidence in the existing resource, and also gather information for metallurgical test work. We're looking to produce here hopefully by ISR, in situ mining technique. We need to do further work on metallurgy and hydrology to ensure that's a suitable strategy. And our other uranium asset that came along with the portfolio is the Rattler uranium project. That's a 1,960 acre portfolio of projects, two projects, or they're one project really, two packages. They're located 85 kilometres north of Energy Fuels White Mesa Mill, which is the only operating and fully licensed conventional uranium mill in the US. It involves the historical Rattlesnake mine, which is a reported historical mining, actual production of 1.6 million pounds of uranium and 4.5 million pounds of vanadium. Recently, we added the Sunnyside mine to that, which has got also 3 or 4 adits on it, historical mining, more around the turn of the century. And it's a really good opportunity for more near-term production. We believe we can develop a resource there pretty quickly, get a hold of the old data and do some drilling. And then, because it's a conventional mining operation and there's a mill nearby, that's an immediate path to production. So why Okapi? It's a highly leveraged uranium play. If you believe in the uranium price like I do, then we're going to run with the uranium price over the next couple of years. We've got an experienced team, deep in country management. We've got a good resource, a strong ESG focus. The new green nuclear power is the new green energy, carbon-free to replace coal, and the way society is going to move forward. Maybe not so much Australia, but the French and the rest of the world are certainly embracing nuclear power. Thank you.
Good on you, Ben. Ben Vallerine. I had to go and ask Ben and his colleagues what Okapi meant. I thought there might have been some deep, meaningful thing, and he's right. They do run very fast. If you happen to look up the little Okapi, they're known as the giraffe of the forest. They're quite an attractive-looking little animal, almost like a zebra/horse. Hence, I think that branding and Coup, who are the guys that are behind that wine giveaway, actually developed the branding for them as well. So interesting link there. Right, back to health and wellness. You got your clicker ready, sir? You've drummed it into action into submission after yes. All right. This is the drive of another little West Australian company. It's come up with an alternative that could revolutionise treatment for sufferers of autism and a host of other conditions. How are they doing it? We're going to find out. On the face of it, when you look at it, it looks fairly simple, but it has taken a lot of skill, a lot of work, and many trials to get it to the stage that we're about to hear about today. Would you please welcome back Brian Leedman to talk about Neurotech International.
Thank you, Chris, for that lovely introduction. So Neurotech is a really exciting biotech play. And I want to just educate the audience for a moment before I get into the presentation about how biotechs actually work. So there's two major things. There's safety versus efficacy, and do the benefits outweigh the risks? And this is in any drug development. And cannabis is a really exciting space because there's a lot of cannabis companies that have come along. And there's one thing established about cannabis is that they are safe. Nobody's ever died from overuse of cannabis. But you have to actually show that the safety and the efficacy. And so that's what we do preclinical trials for. We want to show that our drug is safe, which we pretty much know that it already is, and we know that we have to show that it's efficacious. But then you've got the second hurdle, which is do the benefits outweigh the risks? And the problem with all cannabis stocks is that they have THC within their compound. But it's actually the cannabinoids that, particularly when you're treating neurological conditions, that's the key to treating a whole range of neurological conditions, be it autism, MS, Alzheimer's, and so forth. So they all have this problem because they've got the THC, with the exception of Neurotech. And Neurotech is the only company in the world that's exclusively licensed strains of cannabis that contain little to no THC. That's a really important distinction because we're actually the only one that's actually doing clinical trials right now. And that is going to unlock untold wealth for our shareholders within the company, because when we actually establish that the product is efficacious, when it comes to the regulatory hurdle, do the benefits outweigh the risk? Well, if you've got a drug that you've shown is efficacious, but it still contains THC, then that is a big problem from a regulatory hurdle perspective, because then you've got a drug, it's a narcotic, you might be treating people to treat various things, but it's got THC within it. And that's going to be a real hurdle to overcome from a regulatory perspective. We don't have that problem. We still have to show that the product is efficacious, and that is obviously a big hurdle to overcome. And that's why we're doing the preclinical studies and now the clinical studies. And the preclinical studies is a great indication of how your actual human trials are going to go. So just keep that in mind, that we're the only company that's actually in clinical trials with a cannabis product that has all the terrific cannabinoids that have the properties that are going to unlock the potential for neurological conditions without actually having the THC component in it. And that's effectively what this slide is talking about. We've got less than 0.3% THC naturally within the strains. And that is actually the key cutoff, because if you've got greater than 0.3%, you're considered to be a narcotic. So we don't have that problem at all. And yet we've all got within that, we've got the CBDA, the CBG, CBN, CBDB, CBDP. These are the key cannabinoids that all the research is showing is going to unlock the potential to treat a whole range of neurological conditions. We've actually got a clinical trial being conducted at Monash Children's Hospital in Melbourne, and that's to treat autism spectrum disorder. We've had some terrific preclinical results in multiple sclerosis, so we'll be moving into human trials for that very soon. And we've completed all these preclinical studies and now into human trials. We also have a product called Mente, which we're commercializing. That's also for the treatment of autism. It's a different type of product. It's a headband that children wear, and we're commercializing that as well. In terms of the corporate overview, the share price is about 5 cents, closer to 6 at the moment. It's almost 700 million shares on issue. We've got our quarterly report coming out tomorrow. It's going to show a very strong cash balance. So we're going to have at least 4 quarters of cash, which is important for anyone looking to invest. There's no particular plans to do any capital raisings in the near future. So we've got a reasonable market cap of 35 million, but there's tremendous upside, particularly if we hit the goals that we're looking to achieve. And there will be some very significant news in this company in the very near term. If you look at the board, a number of the people on the board are actually here today. We've got Winton Willisey together with Krista Bates in the audience now. Myself, I'm a biotechnology entrepreneur. I've co-founded a number of ASX-listed companies. Probably the most famous one is Imaging, which is currently capped at $2.5 billion. Other companies that I've had have all done fairly well over time, and investors have made good money. And I might add that we've got Professor Alan Cripps, who recently joined the board. He's a terrific addition to our board and the experience, being a former Pro-Vice Chancellor at Griffith University. He's just a great font of knowledge, particularly in this space for neurological disorders. So I think we've got a terrific team moving forward, and this is what you want to see on a really good quality biotech company. So if you look at the medicinal cannabis industry, it's obviously been it hasn't had a great start because of the illegality of the THC element within cannabis. And there are only actually 4 regulatory approved drugs based on cannabis, which is incredible considering that when you compare it to opioids, there's literally hundreds and hundreds of drugs that are regulatory approved. And you can see the size of the cannabis market, it's very much growing. In terms of the numbers, yeah, they're big, they're in the billions of dollars, but compared to the opioid market, it's tiny. But look what's happening. The opioid market is actually starting to decline. And the reason for that is because people die. People die from overuse of opioids, and it's a big problem. It gets a lot of press. So the medicinal properties of cannabis is just a huge growth industry, and that's the reason why you see so many cannabis that are now stocks that are listed on various exchanges in the world, particularly in Toronto and also on the ASX. But we are so different to all of them because of the fact that we're the only one that has less than 0.3% THC naturally within our strains. And we can take that forward in terms of the clinical trials that we're doing. The markets that we're looking for are enormous, and these are all very poorly met illnesses. Traumatic brain injury, multiple sclerosis, epilepsy, migraine, ASD. These are problems in society. People throw huge amounts of money in drug development to try and treat these disorders, and they treat them fairly poorly. The drugs that are actually approved to treat these various illnesses all have one major thing in common. They've all got significant side effects associated with them. The one thing about cannabis, other than the THC element, which will make you high, there are no safety risks in cannabis. It's already been established safe drug. So that's why so much money gets poured into the cannabis sector, because we can see unlocking huge potential to rival the opioid market, which is why you very much, people in the audience here today, you should be investing in cannabis stocks. Obviously, I'd like you to invest in Neurotech particularly, but that's because we're different to the rest. But there's certainly a huge growth market. And we're actually in clinical trials right now for ASD, and we'll be moving into MS very soon. And certainly traumatic brain injury is another one that we're really interested in. So our strains have unique properties, and it's actually the anti-inflammatory properties of our strains that makes all the difference. And that's what we've done all the preclinical work in. We've established in their studies that the anti-inflammatory properties have a major effect on inflammatory diseases. And the diseases that I've just highlighted before, all these neurological disorders, they're inflammatory diseases. So you want drugs that are anti-inflammatory in nature. And it's regulating and suppressing inflammation by acting on the arginase 1, which is this powerful anti-inflammatory enzyme. And we've also got upregulating and modulation of the beta tubulin protein, which is also essential to the survival and maintenance of healthy survival of brain cells. So these are it's very technical, I know. I'm trying to keep it simple, but effectively, that's what our strains actually act on in the brain, and that's the key to treating various neurological disorders. The preclinical studies is the best indicator you're going to have in terms of how well you're going to do in your actual human trials. And so these statistics that we have here, increasing in overall brain health and viability, also increase in microbial viability and output, these are key indications in terms of the efficacy that we're seeing in test tubes in the preclinical studies, which are going to be the best indicator you're going to get moving into human trials. We've recently just announced some results in the MS studies that we've done and demonstrated that these biomarkers are key inflammatory markers during disease onset and progression, and that our strains were found to be more effective than the standard, which is CBD. And so compared to that alone, we were better by a factor of up to 2.5 times. So those are the key findings from our preclinical studies, which give us the confidence to go and use shareholders' money in the rather expensive human trials that we're now undertaking. So in terms of the pathway, these in vitro assay assessments, they've been done. We've done the product formulation and final dose profiling. These are two key things that you must do before you move into your human trials. And then moving into the phase 1/2 human safety study, which we're conducting at Monash Children's Hospital. We started that in May of this year. We're going to get the readout of the results of that study certainly maybe by the end of November, certainly by December. These results will be hotly watched by the market and by the press in general, because we all know that autism is a horrible illness for kids. It affects the parents probably even more, and they're looking for treatments that are going to be able to treat that disorder. This is a large study in the sense of in terms of a phase 1/2 with 20 patients. We've got a team of psychologists that are assessing these kids on a weekly basis, and the results will be very meaningful. So watch this space. You should certainly be putting Neurotech on your watch list if you whether you invest today or wait for the results. Either way, I'm confident that this will be a very meaningful result, which will have a major impact to the medical community, because we're the only one in the world that's actually doing this study. So the whole medical fraternity is very interested in what we're doing in this particular space, and we will be getting the results in the very near future. Why target ASD? Well, I mentioned earlier about side effects associated with drugs. I mean, the drugs Ritalin and Concerta, they sell in the multiple billions of dollars. These are huge blockbuster drugs. And look at the side effects associated with them. You know, appetite loss, dry mouth, anxiety, irritability, and so forth. These kids have already got problems, and you're going to throw all these other issues at them with the treatments that we're giving them. Imagine if you could have a treatment that's based on a cannabinoid that can provide the efficacy and the benefits for those kids without the side effects, particularly given that you have no THC within these strains. So this will be a blockbuster drug if we can show the efficacy. And of course, from a benefits outweighing the risk, clearly the benefits of the efficacy are going to outweigh the risk in the sense that there's no THC element to the drug. So there is no side effect on that basis. So that's why this is a very exciting trial that we're doing. And if we can get success in autism spectrum disorder, I'm sure the market is going to go, wow, in terms of the anti-inflammatory properties, what else can they treat? Can they go after MS now? Can they go after brain trauma or even Alzheimer's? So there's so many different applications if we can show that we've got those benefits happening within the brain with our treatment. In terms of pathways to commercialization, there's three huge markets. Starting with prescription, obviously a lot of doctors are now prescribing cannabinoid-based drugs to patients, but they're doing it on a sort of an ad hoc basis. This is something that will grow with more regulatory approvals in drugs. The nutraceutical space, I think, is a particularly exciting one. If you look at all the big nutraceutical companies like Blackmores, Swiss, Nature's Own, and so forth, even Nestle, there's not one cannabinoid-based nutraceutical over-the-counter product available anywhere in the world. And that's because they're moving in that direction. But the problem is with all of them is that the THC side, they're simply not going to have an over-the-counter product with THC that's going to be sold by Blackmores, for example. It's just not going to happen. Unless, of course, you can present them with a product that has little to no THC with it. So that is for us a major, major market that we're focused on, the nutraceuticals, and there's government regulation that's being changed right now that's going to open up that over-the-counter space. And I think that Neurotech is going to be best positioned to capitalize on that huge growth market in over-the-counter nutraceutical space because of those unique properties that we have without THC and the anti-inflammatory properties of our specific cannabinoids. And then, of course, you've got the pharmaceutical market, which is the biggest of them all. If we can show that we've got the efficacy and we pass regulatory approval, clearly we don't have the risks associated by other companies because we don't have the THC element. We have a very huge market that's in the pharmaceutical space, and that's going to be open up doors to the big pharmaceutical companies like Pfizer, Merck, Johnson & Johnson that are looking for new drugs to treat existing problems. We've got to do the work, and we're going to get the results on that phase 2 clinical trial very soon. And then we'll move into phase 3. But by that stage, we're very confident if we get a good result in phase 2, that we'll be successful in phase 3. The partners are really important for a small company like ourselves to be partnered with Monash Health, RMIT University, the Walter Eliza Hall Institute, Monash University, and so forth. They've partnered with us. There's going to be new names added to this list, bigger, more exciting names as we proceed. So please, watch this space for us because we've got a great group of partners and it's only going to get better. In terms of finally a news flow, we've already achieved so many milestones in the preclinical space and further results that we've announced in MS, these interim results that we've produced in the phase 1/2 clinical study. We'll get those final results towards the end of this calendar year. Then we'll move into phase 3. That's going to be a very exciting phase for us. And also then on the back of that, moving into new indications like multiple sclerosis. So these are huge unmet markets that we can treat uniquely with our strains. We exclusively own these strains. They're actually grown in Griffith, New South Wales. They're exclusively ours for all neurological disorders. And, we're very excited taking it forward. And I hope I finished in time. And I thank you very much for your time and listening to me. And I'm still around for the rest of the day. Thank you.
No. You pretty much did, Brian, but I was so intrigued with what you were saying that I'd forgotten to look at the clock. Did anyone else feel that way just then? Yeah, I genuinely did. So you did. Thank you. And the clicker was well behaved today, which was awesome. Isn't it an interesting possibility, though? Because I've got a niece and a nephew who are autistic, and one of my kids currently is looking at doing something for ADD, ridiculously bright kid in his early 20s. And I'll share a personal story with you or go back. I've got a 20-year-old kid who would like to self-medicate with cannabis to cure his ADD. So something like what Brian has would be amazing. He's recognised the properties that are in there to treat something he has, and he doesn't want to do something like Ritalin. So if we could access what you have, Brian, 2022 can't come quick enough as far as I'm concerned, mate. Can't come quick enough. All right. We're going to take a little trip into another world. We're going back into the world of mining now. The next gentleman to join us up here, known as the champion of the City Beach Tennis Club. Oh, sorry, wrong bio. Wait, no, Keith Coughlan. He isn't too bad at tennis. Keith Coughlan is also the executive chairman of European Metals. It's a company which is developing the CINOVEC project, which is the largest hard rock lithium resource in Europe. It's located in the Czech Republic. Do you speak Czech?
No.
Okay, Jake. The project is fully funded to final investment decision expected in mid-2022, and it's actually actively supported by both the Czech government and also the European Union. Keith, welcome to you, sir.
Thank you very much, Chrissy, and thank you to the organisers. It's a very good conference in my view. It's a very good time to be involved in the lithium industry. One of our largest shareholders, very successful Luxembourg fund called Thematica Future Mobility, put out a paper a couple of weeks ago now. In part, they said, we're only at the beginning of this. We're at the beginning of a new industry, the beginning of a new thematic. The lithium-ion battery bonanza is just getting started. And the reason I mention that is, I'm sure you're all aware that the lithium price has appreciated significantly over the last year and a half, and a lot of lithium equities along with it. And sometimes, you know, as an investor, you look at that and you think, well, perhaps I've missed the bus here. So let's talk about a few things today that I think indicate that's not actually the case. It's a very busy space, and every week that goes by, we see significant developments in the industry. So just in the last 3 weeks, BMW announced an order for $32 billion worth of batteries. Toyota announced they're investing $13.5 billion in batteries. Tesla added another $8 billion spend to their gigafactory in Berlin, which is incidentally about 250 kilometres from our project. BlackRock here, and even in Australia, invested 100 million or announced the investment of 100 million into EV charging infrastructure in Australia. CATL, the big Chinese company, raised 9 billion of new capital to expand their battery production, and Rio Tinto committed 2.5 billion to their Jadar project in Serbia. So there is still a lot happening. There's a lot of money being spent by some very, very big companies. So we think this is going to go on for some time yet. You've probably seen 1 or 2 of these disclaimers today, so I'll keep going. So just a couple of key points of the project. It is a fully integrated lithium mine and processing plant. I make that distinction because here in Western Australia, we're very familiar with people like Pilbara Mines, for example, producers of spodumene concentrate who then ship it off, usually to China, where it's converted into lithium chemicals, and you're basically letting someone else take that end of the profit. Yesterday, Pilbara announced a JV with POSCO, the big Korean company, which basically allows Pilbara now to go downstream into lithium chemicals. A very good development, I think, for Pilbara, who've done an excellent job this last couple of years. There's a guy in the lithium space, Joe Lowry, very well-regarded commentator on the space. His comment in regards to that transaction was, the future belongs to integrated lithium producers, which is exactly what we're going to be in a relatively short period of time. CINOVEC is the largest hard rock lithium resource in Europe. It's about the 4th largest non-brine lithium resource in the world. It's a very, very big resource. An important distinction is it's by far the largest hard rock lithium resource in the EU. And I make that distinction because there is a complete commitment to the development of green energy, batteries, electric vehicles, and critical raw materials by the European Union, which I'll elaborate on a little in the next slide. Compelling economics. We're in a definitive feasibility study now. The most recent PFS is 2 years old,
On those numbers, which were based upon lithium hydroxide at $12,000 a tonne, it's more than double that today in the spot market. But even at those prices, the post-tax NPV, well over $1 billion US, IRR of nearly 29%, and the ability for us to produce just over 25,000 tonnes per annum of battery-grade lithium hydroxide for less than $3,500 US a tonne. So very much in the bottom half of the global cost curve. That's a phase 1 plan. As I said, it's a very, very big project, very big deposit, and the opportunity is there for us to increase that production significantly. We have 3 very strong partners. CEZ is the Czech power utility, 13 billion market cap, euro market cap company, basically owns the grid in the Czech Republic and have been operating in the country since it became a country when the wall came down. This clock is not going, so I've got no idea what the time is, sorry. EIT, Energy, is an official European Union body. It's the facilitator of the European Battery Alliance. We have a formal arrangement with them that we entered into last year. An SMS Group, very big German engineering firm who are conducting our definitive feasibility study for us. The project's fully funded to our final investment decision expected in about 12 months' time. We have very strong ESG credentials, which I'll also elaborate a little on. I mentioned the EU. So the EU is all in. They're all in on batteries, all in on electric vehicles. That's without any shadow of a doubt. 550 billion euro commitment to green energy. They're not going to commit 550 billion euros to an industry and then rely on China for a significant part of the supply chain. And China currently controls over 80% of the lithium chemical market globally. So the EU has said they want to be 80% lithium self-sufficient by 2025, which is impossible. They won't get anywhere near it. But it's as a statement and what they want to try and achieve, it indicates the level of support that we're getting in the region. And this is why. So this new car sales across the region last month. So if you add all the various different types of electric vehicles there, you've got Germany, just over 47% of all vehicles sold in Germany last month were some sort of electric. France, just over 40%, and the UK, 51%. So the majority of vehicles sold in the UK last month was some sort of electric vehicle. This is the forecast from our friends at RK Equity. So going from 3.2 million EVs sold in Europe last year to 15 million in 2025, nearly a 5-fold increase. And that's what's driving this demand. So the demand for lithium globally is going to grow enormously. It's going to grow nowhere quicker than in Europe. And there's no supply. There is no battery grade lithium currently produced in Europe whatsoever. And you can see the numbers there out to 2030. Also from RK Equity, this is the supply gap that they foresee coming out. So already looking at the metal being in deficit right now. That is demand outweighing supply. Yes, more production will come on, particularly if we see these prices we're currently seeing persist and potentially increase. But a lot of production has to come on to get anywhere near getting this market in balance. So this is now getting to be a pretty crowded slide. These are the battery factories in the region, either constructed, in construction, or advanced planning. So everything production out to 2030. If you added it all up, the amount of lithium it represents is about 125% of the total lithium consumed in the world last year. So, the supply-demand equation is without any doubt. CINOVEC is there, if I can work the pointer. Somewhere there. Anyway, right in the middle of all that is the project. It's 100 kilometres from Volkswagen's factory at Zwickau, 250 kilometres from a Tesla Gigafactory in Berlin that I mentioned, and 50 kilometres from a new factory being planned by our partners, CEZ, and the Czech government at a little town called Prunov. CINOVEC is a historic tin mine. So tin's been mined on and off here for nearly 600 years. So as you can imagine, all the infrastructure is in place. It's a historic underground mine. This is very beneficial to us from the point of view of our ESG credentials. We're not digging a big open pit, very minimal surface expression, and very little impact on the locals. I'll elaborate on that in a moment. I mentioned CINOVEC was the largest hard rock lithium resource in the EU. This demonstrates that pretty clearly. About 65% of the total known hard rock lithium resources in the EU. This is why we've got the support of the European Union. ESG profile, this is obviously becoming more and more important as time goes by. There's 60-odd trillion US dollars of funds under management globally, and about half of that, or about 30 trillion US dollars, has to apply some sort of ESG filter to every single investment they make. So ESG is important, and it's getting more and more important. From our point of view, as I mentioned, historic mine. So it ticks a lot of environmental issues, a lot of social issues. It's a very low energy roast, low temperature. So that helps with the costs, but it also obviously helps with our carbon footprint. We will have the results of a full LCA, a lifetime carbon assessment on the project in about a month's time, but anecdotally, we believe they'll be very good numbers. Having CHES, the Czech power utility, as our partner is very beneficial because they have committed to providing us with solar-powered electricity for the project, which obviously again just helps with all of our ESG credentials. Strategic partnerships, I mentioned, I'm running a little short on time, so I won't go through this in any great detail, but having big brothers in the region is very, very important. We're starting conversations with potential financiers now, and having these guys in our corner is a lot better than a little company from Perth turning up asking for $500 million to build a project. The PFS highlights, I mentioned them earlier, I won't go over them again, other than just to say this is such a large resource that this model, 25,000 tonnes or thereabouts for 21 years, uses less than 10% of the overall resource. So we could produce for decades, or alternatively look at studies to increase that production and potentially double it. So where are we? The top boxes have all been ticked. The most recent one we announced, the bottom box of the top section there, we announced our upgraded resource model last week, 10 days ago. So going forward, we're in the definitive feasibility study, as I mentioned, so there's a lot of things getting reported through about that. But more importantly, progressing strategic partner discussions. So offtake, very important next step for the project. You can't fund a lithium project without offtake. The offtake market is changing dramatically. It's becoming more and more in favour of the sellers because of the supply-demand equation, and all of a sudden there are a lot more people interested in buying lithium from us when we start production. We have some further permitting to complete, a couple more studies that I alluded to just a moment ago in regards to potential increase in production, our formal ESG credentials, our life cycle assessment, which we think we'll have sometime in the next month. And these are all very positive, very significant developments for us. So in a nutshell, the lithium market is here to stay. We're going to see high prices, relatively high prices for the foreseeable future. Europe, the demand is enormous and there is no supply. Okay, the other way to get lithium to Europe is to ship it from Australia, ship it from South America. With the world's focus on ESG, on carbon footprint, clearly that has a much bigger carbon footprint than us putting it on a train or a truck and taking it no more than 250 kilometres. Brief presentation. If you're interested, please go on the website. There's a more expanded version. Thank you very much for your time.
Thank you, sir. Right. One of my colleagues at 6PR a couple of weeks ago investigating the next company to take to stage, and the headline that I took away from it was $97 million of profits in 21 years. And I thought, well, that sounds interesting. So I'm very interested to hear the full scope or the furthering of that discussion here on stage today. Could you please welcome up Keren? Keren is the MD for Trigg Mining. You're also the CEO, aren't you, Keren? Keren Paterson, MD and CEO of Trigg Mining. And it's this little story that starts all the way out, I think, in Laverton. Laverton?
Correct.
All the way out in Laverton's.
Yep. In our backyard.
In our little old backyard. So let's hear if this success story could translate to your portfolio.
Thank you. Thank you, everyone, for attending this conference. I'm really excited to share the story of Trigg. And as you'll see on the headline there, it is really about Lake Throstle. But before I talk about that, I just want to share a bit of history around Trigg and why it exists in the first place. When I was 17, I ran away from home. packed my bag and moved to Kalgoorlie because I was a teenager with a purpose. I wanted to do it a bit differently. I wanted to build mines communities can be proud of. And that is the purpose of Trigg. Trigg's also named after my ancestor and one of the early settlers here in Western Australia. He was known as a man of energy and compassion and arrived at the very beginning of the Swan River settlement in 1829. And he built the first infrastructure for Perth, being the causeway and the Canning Bridge to be able to bring the goods up from Fremantle. So this is very much a Western Australian story with a Western Australian project with a global impact. We've got 2 pages. So the key takeaways on the corporate overview here is this is a project that's not like normal mining. We're looking for minerals in brine. And that means that we don't need a team of mining engineers and civil engineers to look at this. I need a lot of people that are very smart around chemistry. And with that, the appointment of Rod Baxter on the board earlier this year, and in July, before we even finished our scoping study, Tony Chamberlain, who has a PhD in both of them in fact have PhDs in chemistry. And Tony also comes to us with 2.5 years experience in this space. Another key takeaway is the enterprise value of Trigg and what we've managed to accomplish in the 2 years since listing. Because Lake Throssell is a greenfields discovery. No one had actually set foot on that tenement before we listed, not even us. We had done all the groundwork to believe, we had a hypothesis that that was going to be a game-changing project, but we're the first company to ever be granted permission by the Nuttinjara, the traditional owners of that country, to explore it. The enterprise value of 5.7 million is important. And also, we haven't yet attracted the institutional investors. But as Chrissy pointed out, we have a 21-year mine life that I'm about to talk about. This is a very substantial production rate. So as we said, it's in our backyard. It is out the back of Laverton, which used to be considered the back of nowhere, but it is really well endowed with infrastructure. And in fact, Lake Throssell sits on the Great Central Road, which is being upgraded to be the Outback Highway. And that'll be the 3rd national Trans-Australia trade route by 2028. The bitumen is already going down. They're doing the first section out of Laverton, and we anticipate that that will be in place by the time we get to construct this project. So the project is at this stage, which is the first part of the story. Our maiden resource was announced just in May this year, and we've upgraded it twice since then to now be 14.4 million tonnes of sulphate of potash. And I want to emphasise potash. I've had a number of conversations at this conference and even presentations that have confused potash with phosphate. Both are incredibly important for agricultural production. Because when you go to Bunnings and you look at the fertiliser blends, you're looking at NPK, N nitrogen, P phosphorus, K potassium, and they're all essential minerals for plant growth. They all have their own purpose, and I'll talk more in detail about what sulphate of potash is, but just wanted to be clear that we're talking about potash and not phosphate. And it is sustainable mining. And this is what gets me really excited around my purpose, in that we're not going to be digging an open pit. There's no rock waste dump. There's not even a tailing storage facility. This is about pumping brine, harvesting brine from an active geological deposit, putting in solar evaporation ponds and using natural energy to produce a natural product for food production. So the scoping study that was announced just a couple of weeks ago, the key, there's a lot of numbers here, but the ones I really want you to focus on in this presentation is the sulphate of potash price. And our assumption in the study was $550 US a tonne. Our nameplate capacity, 245,000 tonnes per annum is our starting point. And that's more than twice the expansion case of the one commercial project in Australia, Callium Lakes, which is looking at an expanded case of 120,000 tonnes per annum. And our initial mine life, based on the indicated resource, is 21 years. Those project economics, as Chrissy pointed out, gives us 97 million EBITDA per annum over that life of mine. Operating cash cost of just under $250 a tonne. This places Lake Throssell in the top 10 global producers and the lowest cost quartile. What does it look like? Well, it's going to be a project of trenches and bores. We anticipate we're needing around 110 kilometres of trenches across an area that's 36 kilometres long and starting with 22 bores, targeting the ancient Paleo Channel or Paleo Valley in this case. The valley is about 36 kilometres long inside our tenement. We've got more ground under application that'll extend that. It's about 5 kilometres wide and up to 150 metres deep. So the best way to think about this is if you've got your bathtub, 36 kilometre long bathtub, mind you, and you put sand and gravel, some clay and some more sand and more gravel in it and fill it to the top. When you turn the tap on, it doesn't immediately overflow. It fills up for quite some time before it does. And that water is filling the pore spaces, and that's what we're targeting. The brine is so concentrated in salt minerals, sodium, chloride, potassium, magnesium, and sulfate, that through the evaporation process, we can produce a natural mineral fertiliser from those electrolytes that are in that brine within those pore spaces. The site layout, again, it's all about minimising our environmental footprint while we do and produce this natural product. So we're looking at keeping the larger halite evaporation ponds within the lake system. This is like zoomed in part of the lake. It's much, much longer than this in the picture. And then through that concentration process, through the evaporation, is to produce a KTMS, which is short for kainite type mineral salts, or for you and I, that's just potassium rich salts. They then go into the concentration ponds and then produce the head grade product to go into the process plant. The more technical minded, here's a process flow sheet. But what it's showing is it's a chemistry project. That's why I need those PhDs in chemistry. But what it's doing is a natural process as well to produce a natural product. And the end product is packaged, ready for the farm gate from the mine site. In a scoping study, we've assumed that for a cost scenario that we'd export all the product out of Fremantle, but as Australia is a net importer of all of its potash, ideally we would sell this locally. And you can see the product that we intend to make there in the photograph. But wait, there is more. That is the beginning of our story. At Lake Throssell, we've got more tenements under application, and we anticipate we'll find even more sulphate of potash. We've identified an exploration target that's another 2.6 to 9.4 million tonnes over and above that mineral resource of 14.4 million tonnes. So we're looking at increasing the mine life or even increasing the production rate as well. And then just to the south, this is only 35 kilometres to the south, within the same Paleo Valley, is Lake Yeo. Now, we haven't set foot there yet either, but at this beginning stage, sorry, we have already been to Lake Throssell, obviously. We've done a lot of drilling out there to get to this stage. But the Lake Yeo, all the pre-work that we've done, indicates that this is just as good and may even be better than Lake Throssell. So this is looking like something that will add to the mine life, expand that production case. We just need to get out there and start doing the exploration to build up this story on top of Lake Throssell. So why sulphate of potash? And why would this hard rock underground mining engineer be so interested in it? Well, given that it's so important for our food. Without it, without mineral fertilisers, we wouldn't have half the world's food production in the first place. But there is two types of potash. One that we're looking for and looking to develop there at Lake Throssell is potassium sulphate, which provides 2 of the 4 macronutrients. When I talked about NPK, sulphur is also considered a macronutrient, and it doesn't have any deleterious elements to it. So it's a really pure product. And it's incredibly important for the chloride sensitive crops and in areas of arid land and even in acidic soils, which is what we do have here in Western Australia. Muriated potash, which is what BHP is looking at with the Jansen project, it's 50% chloride. And that's the detrimental element of salt. That's what increases the salinity. That's what has an impact on the pH of the soil. And it's really not great, because what we're relying on when we use muriated potash is the rain to take that, leach it out of the soils, in fact, and take it into the river system and increase the salinity of the river system. And that has been considered okay in agriculture industry for quite some time. But as farmers become more and more aware of their custodianship of soil and the increased need for sustainable agriculture, they really would prefer not to use that product and would much prefer sulphate of potash. But the problem is getting hands on it. It's a niche market. It's about 7 million tonnes a year, substantially larger than the current market for lithium, but they just can't get enough of it. There's a couple of things here on this slide to fill out that comment earlier. One is, if you look at the blue bars here, this is a natural brine, and that's what we're looking at producing from Lake Throstle, is sulphate of potash from a natural source of brine. But we just don't meet global demand that way. Another way to do that is a chemical process called Mannheim, where they purchase the muriated potash and the sulfuric acid, put it in a blast furnace and heat it to around about 800 degrees, consuming large quantities of energy, to then produce a chemical version of sulphate of potash. And for every tonne of that, 1.2 tonnes of hydrochloric acid. The market for hydrochloric acid is not very strong, and you need to have that market nearby because you can't store it. So Lake Throstle is looking like it'll be a top 10 global producer and lowest cost quartile as well, which makes it sustainable economically. Now the price, this is really fundamentally important in what we're looking at with this project, in that we assumed a price of $550 a tonne. But given everything that's happening globally and the increased demand for fertilisers, the increased cost of energy, the price is going through the roof. There's also a margin. So when I talked about muriate needing being part of the Mannheim process, there's always been a margin for sulphate of potash over the cost input there of muriate. And if we're talking about metals a lot in this conference and the growth in the price of those metals, but what I'm also seeing in the agricultural space is possibly a boom that we're not yet talking about in fertiliser and agriculture. So summing up, Trigg Mining investment case, Lake Throstle is set to be a top 10 global producer and lowest cost quartile. It has outstanding economics for a multi-decade operation for at least 21 years. It is located in our backyard, which is a world-class mining jurisdiction, an Australian-made product, natural potassium fertiliser for natural food production. We have significant exploration upside. This is about global megatrends, as we heard yesterday. We've done the scoping study 2 years out from listing, and we already have the pre-feasibility study underway. Thank you.
Keren, thank you. It's an interesting story, isn't it? And I didn't realise that you were 17 when you headed out that way either. Even more impressive. Now, our final presenter before lunch, and you don't really want to go to that door, trust me, sir, because our final presenter has a little sweetener in his hand, and everyone that leaves, actually go, bugger you, off you go, that's it. Go now, close the door. Keren, close the door when you get to it, will you? Because we've got a little, yeah, Mark's got a little goodie here. And at the end of his presentation, we're going to be sharing that with someone. So he has to go, all right? So this is the sweetener for you to go and have a chat with Mark during the last couple of days. He's got a bit of a passion, and his passion is wines from the Barossa. So this is, and I should have actually held that with two hands, shouldn't I? Because there's $300 plus worth of a bottle of wine here. So if you put your name into the little gold there at Legend Mining, which operates out of the Fraser Range, another beautiful part of WA, out towards the border there. You will go in the running for this bottle of wine at the end of this talk. You need to be in the room when we draw it out. So your favourite tipple here has lent its name to the project that you're about to chat with us about today. It's the Rockford project. So ladies and gentlemen, would you please put your hands together for Mark Wilson, the MD of Legend Mining.
Thanks very much, Chrissy. Can you all hear me? Great, because last presentation I gave, a chap down the back of the room put his hand up and said, yes, I can, but I'll happily swap the seat with someone who can't. It wasn't a great way to start. Our project, and I always like to put an actual photo of where we are because it gives you a touchy-feely part of what we do and where we operate. But that's a semi-permanent camp that we've built out at our Mawson prospect. And the tram track lines that you can see there are actually to process the diamond core. And during this year alone, we've drilled 25,000 metres of diamond. And it's been a massive effort by the team, you know, strangled by labour shortages of COVID. It's extraordinary to me that the big companies are now talking about it. You know, I'm actually on record in the Kalgoorlie Miner at Diggers and Dealers last year, forecasting these border closures as being a real impediment to all industry. And I just can't wait for the day that our Premier can use the word open, border, and travel in one sentence. But anyway, enough of the politics. Great to be here, an inaugural conference, and what attracted me to come here was a new audience, and looking at the faces, there are plenty of you that I'm sure haven't heard this story. We're very proud of our ESG record. Take you to the website to look at it. What I'd like to talk to you about today is give you a little discussion about the nickel market, the investment case for Legend. The Rockford project, as Chrissy introduced, was named after the Rockford winery in the Barossa Valley. Those of you who know me will understand that I not only talk the talk, but walk the walk in that region. Cover off Mawson prospect, our regional exploration, the activity programs in a summary. The nickel market's a fascinating thing because, like all markets, it's driven spot price by day traders, hour by hour. But you can see the trend lines there of the last bit of a very definitive rise in the nickel price. At the same time, you're seeing a drop in the LME stockpiles. Now, the LME stockpile is not the only stockpile on the planet, but it gives you an indication of what I call the basic supply and demand of, as the supply drives up, the price goes up. Keith Coughlan gave a great presentation, lithium, two talks ago. Nickel does the heavy lifting in these electric vehicle batteries. When they talk about an 811 battery, the 8 is nickel. And the chart here, produced by Macquarie Commodity Strategies, basically gives you the current nickel market, total market, 2.4 million tonnes per annum, and the battery component of that, 8%. Their forecast out 10 years is a 4.5 million tonne market, and the battery component up to 27%. So you're now looking at a 500% increase in the demand for the battery compatible nickel, which is the nickel that we're looking for out in the Fraser Range. It's what IGO is producing, it's what Western Areas is producing, and that's what characterises the nickel sulphide producers of WA. But if you want a simple little summary of what this is all about, a bigger slice of a bigger pie, and that's what we're chasing at Legend, and I'm very happy to be spending my shareholders' money looking for it. Our corporate slide, we've got a great set of people and people around us. Michael, our chairman's here with us today, as is Lynn, our office manager. All of the people in that slide are shareholders, Everybody's paid cash for their shares, including our largest shareholder, Mark Creasy, very successful guy out in this area. $27 million is his current investment for that. Our second shareholder is IGO, who are the nickel miner in the Fraser Range. And you can see we've got great company in that top 20. Even though we've got 2.7 billion shares on issue with a market cap of a couple of $100 million, the top 20 hold 65%. The new arrival on our board, Oliver Kitty, very important. He was Creasy's exploration manager for 10 years before he joined Legend. And so his experience looking for nickel sulfide in the Fraser Range is second to none. Well cashed up, and there are $10 million worth of options that are exercisable next year of an additional source of funding. So why invest in Legend? I've covered off the people. We've got a very large tenement package in a great area, which I'll talk to soon. Nickel, I've discussed. The cash we've got. You're always going to hear a systematic exploration approach from me and from Legend. And the Mawson discovery in 2019, 2020 took us from this 40 million market cap right up to nearly 500 million at the time. Don't worry about this worrying looking graph falling off here. The real story is 20 million when we started. We've spent 40 and we've now got a market cap of 200, and we've got some great prospects to grow the story. Where we are, 250k east of Kalgoorlie, along the Trans-Australia Railway line, a very important infrastructure asset for a project out in this area, because it gives the capacity for construction materials in and product to market. This is what attracted me, it's what attracted Creasy, and it's what attracted everybody to the Fraser Range. And it's the comparison with the Thompson Nickel Belt in Canada. And quite simply, a belt of the same footprint has got 2.7 million tonne of known nickel endowment in Canada, only 300,000 at the moment in the Albany-Fraser Belt in WA. We believe, and those of us who are keen on this area, that this belt has the potential to do this and more. These slides are from IGO, so it's certainly not something that I dreamt up in my sleep last night. Where we are in the Fraser Range, this map here is a gravity map, and the hotter the colours, the denser the rocks. You can see that Legend's project area covers almost that entire gravity high. It's very easy to make an argument that we've actually got 50% of the best ground in the Fraser Range in our project. And there are 4 known massive nickel copper sulfide occurrences in the Fraser Range. Down here at Nova and Silver Knight in this southern gravity high, Octagonal and Mawson both on Legend's ground, with Mawson being one of our discoveries. You can see from that, Legend is this leverage position. The company that discovered Nova, Sirius Resources, went from 10 million to 200 million in the space of 3 years. This is the sort of punching power that we've got at our project. The Mawson prospect, as you can see, 35k from the Transline, a 16 by 6 cluster of intrusives. And I'd now like to just flick across to our other executive director, Oliver Kitty, to give you a quick run into Mawson in the Fraser Range.
Welcome to the Fraser Range. We're on site here at Mawson, our lead prospect as part of our greater Rockford project, 3,000 square k's of prime real estate in the Fraser Range, specifically targeting orthomagmatic nickel copper sulfide. Welcome to Mawson. Let's go have a look. Mawson was discovered in December 2019 and is now the 4th known occurrence of massive nickel copper sulfide in the Fraser Range. Obviously, the Fraser Range was brought into the investor spotlight because of the discovery of Nova in July 2012. And ever since then, there's been an iteration of companies coming to the Fraser Range looking to explore for massive nickel copper sulfide. The Mawson intrusion is a central intrusion in part of what we call the Mawson Intrusive Complex, which is a 16 by 6K area of a cluster of intrusions. We're starting to interrogate these intrusions with broad-scale air core drilling, and that is critically important to understanding, do we have the right rock types and are they fertile? The initial exploration program for 2021 here at Mawson was 10,000 metres of diamond. We've eclipsed the 10,000 metres of diamond and obviously planned a lot more based on the results received to date. And this is really a positive takeaway for investors. We're getting closer to what we believe is the main deposit or multiple deposits here at Mawson. So for the remainder of 2021 field season, the 2 diamond rigs will continue here at Mawson. In addition to that, we're trying to bring up our pipeline of targets from a regional perspective. We will be drilling the highly ranked Hurley and Crean targets in 2021, and investors should look forward to news flow on the back of those drill programs being completed. As most investors would know, the Fraser Range is classified as remote. We're 350 kilometres east of Kalgoorlie here at Mawson, but we're well serviced. We have the Trans-Australia Railroad running right through the southern portion of our tenure. It's a mere 35-kilometre rail spur from Mawson to the Trans-Australia Railroad. In addition to that, we have mobile phone coverage, 3G coverage the entire length of the trans line. We've increased our capacity for water to service the 2 diamond rigs. That's been born from a water agreement signed with the local station owner. Up until this point, we were carting water from Kalgoorlie, which was logistically difficult. We've constructed a semi-permanent camp here at Mawson to facilitate the processing of 2 diamond rigs spinning 24/7 and all the associated sampling and everything that goes with processing of diamond core. Legend is clearly the leverage play. If you're looking for backing a commodity which is forward-facing, i.e. nickel, we're on the tailwinds. We've got the tailwinds of the EV evolution, nickel being a critical component to the new battery technology, specifically class 1 sulfide nickel, which we've found here at Mawson and what we continue to delineate and what we continue to chase more of across our greater 3,000 square Ks. Here at Legend, obviously, we've undertaken an aggressive exploration program for 2021, specifically at Mawson. We've stepped out, we've spread our wings, we're targeting what we believe is a large mineralised system, and the drilling to date has very much proven that. The drilling plan to date has already been eclipsed. We're planning additional drilling on the back of some very, very encouraging results. The drilling will continue on for the remainder of the field season, and investors should look forward to consistent news flow between now and December.
So thanks, Oliver. We've done met testing of Mawson. Basically, this stuff had fit into the Nova pad and not miss a beat. Great recoveries, traditional methodologies. We've done the phase 1 environmental studies, no fatal flaws there. And in terms of our regional work, what I was speaking of earlier, Mawson has been something where we've expanded the footprint of the mineralised chonolith during the course of this year. Importantly, we've drilled a diamond hole into Magnus and Octagonal. All 3 of those have very similar characteristics of Nova in the south, and all have the potential to have these accumulations of massive nickel copper sulfide. This stratigraphy, which runs down here, which is very, well, I call it tram track or straight, is the same stratigraphy that hosts Nova and Silver Knight down to the south. And we're very excited about, once we get all of the information in from our current field program, to assess and assemble and then be able to clearly enunciate what our plans for next year are. We use the best of class in terms of consultants to enable us to punch out of our weight. And many of these guys are world-renowned in their fields. Our programs, diamond drilling, this is almost not relevant today because we're the end of October and coming towards the end of the field season. But just in summary for the Legend journey, you've got a wonderful project. We've got a passionate team of people who are all shareholders and have shareholders' best interest. We're funded to execute, and we will continue to grow Legend to the best of our ability. Thank you very much.
Thank you, Mike Wilson. Now, can I get you to do the honours?
Oh, Chrissy, you're meant to be doing that.
Oh, am I? Okay, fine. Hold on. You
So
put-
I'll hold the bag.
Yeah, we'll put the bottle on the ground because that's more safe.
So just for everyone, this is a 2014 rifle range cab sav. Came out of my cellar, and trust me, you won't be able to buy this at most bottle shops. So
I was-
it's up to the winner.
I was actually just looking it up there so I could give some,
Oh.
insight into it, and I can't find it anywhere to buy it. So you're right.
Well, there you go. See, I tell the truth. No snake oil here.
So the deal is, if you're not here, we redraw it. That's correct. So do you want to give that?
Daniel Roots from JP Equity Partners.
Excellent. Next one. Look at that. That's fantastic. All right. That is going to be very exciting. All right. How many cards did you put in? Oh, he's got a mate.
This is Nick Brownbill from JP Equity.
They're probably outside having a coffee. Serves them right. Ha ha. Yeah. JP Equity, they're gone. Okay, wait. Oh,
Well, this could be interesting. Jed Peng-Kethman.
I know where Jed would be, and he's not in this room. He's working. He's outside. Sorry, Jed. Good try. Good try, Jed. Oh, poor Jed. Yeah. Jed will be outside. What? Yeah.
Justin O'Brien, Mining Professionals.
Oh, there you go.
Very enthusiastic when he put his card in.
Yeah, we're going to have lunch. We'll ring the bell. You know the drill. We'll see you back soon. Thanks so much. Would you put your hands together for Mark Wilson as you go, everyone? Thanks, sir.